I would love to see us sooner rather than later start taking our foot off the accelerator.
We don't follow the market slavishly, but the market curve does suggest that.
We are in a different universe, it seems to me, in the US and in Europe. In Europe, there is flexibility.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 9th of September. I'm Francine Lacqua here in London, and here's what's coming up on today's program. China halts approvals for new online games, while Beijing continues its crackdown on gaming, sending shares in Tencent and NetEase tumbling. Strategy war, from strategy to action. Investors await possible changes to the ECB's bond buying program as rising Eurozone inflation energizes the hawks. And the Fed's Kaplan says strong data actually underpin the case for unveiling a Fed tapering plan this month. He says implementation could start in October. So we have quite a lot of news today. Of course, all eyes on the ECB, on what we're expecting the president, Christine Lagarde, to say. There's a lot of belief in the market, and we can kind of see it today, that actually she's not going to spook the market. So every language will be quite careful to try and make sure that the markets understand the timing of some kind of tapering, and they'll probably be at pain. Once again, what we heard from the Fed is that tapering does not mean rates will go up. But European stocks down some 0.4%, maybe some of the airlines under pressure, still renewed concern about the economy. EasyJet, now I wanted to show you this, down 9%. At some point, it was falling even more. This is on issuance of stock, but also the fact that they decided to reject a takeover. If we look at the individual indices, so it is a sea of red. You can see the FTSE down some 0.9%, almost 1% lower. This is also to do with financial, some of the basic resources there. If you look at the FTSE MIB, it's one of the ones that are losing the least, with down 0.4%. Again, if you look at the DAX, the CAC, and the FTSE MIB, it's all about also the deficit. No matter what the ECB says, there will be a lot of questions on whether taxes will need to rise, like in the UK, to fund some of the deficits because of the pandemic. In terms of groups, and I wanted to show you what exactly some investors are looking at. So we're 1 hour into the trading session. Real estate, and you can see industrial goods, the only gainers. Some of those concerns coming at the forefront, not only what the ECB will do, but of course what the economy does with travel and leisure. That's largely EasyJet, banks and energy under a little bit of pressure today. So China has fired another salvo at the gaming industry. The South China Morning Post has just reported that Beijing will halt approvals for new online games. That's after regulators summoned companies, including Tencent and NetEase, to discuss further oversight of the industry and the need to de-emphasize profits. Well, Chris Woods, Jeffries global head of equity strategy, now joins us from the company's Asia Forum to discuss. Thank you so much for joining us, Chris. I know there's a lot of focus on China. I know there's a lot of focus on equities. Do you see more crackdown coming, more regulation happening soon, Chris, or will things actually level out?
Well, logically, they should start to level up. But clearly, the big problem for Chinese equities from a foreign investor standpoint is that most foreign investors in Chinese equities had their portfolios dominated in three sectors, which were internet e-commerce, education and healthcare. And these are the sectors that have borne the brunt of the regulation. E-commerce remains a huge percentage of MSCI China index. But in the Shanghai market, there's been much less carnage because in domestic China, investors are focused on those areas which the Chinese government is promoting, right, which is areas like semiconductors, electric vehicles, new energy. So there's a divergence between what the domestic market's focused on and what foreign investors owned in China. And because a lot of these stocks were listed in New York, they were easy to own.
Yeah, so what do actually international investors misunderstand about China? Are we reading the crackdown wrong? Do you think it'll be deeper than we're talking about at the moment, or actually will it be more with a lighter touch over many years?
Well, in my view, the Chinese government has not declared war on the private sector, not declared war on capitalism. The Chinese want to upgrade their economy. But clearly, if you only own internet stocks, this crackdown is very bad news, and the internet stocks are going to suffer long-term derating because of the various rules which have been introduced, because the Chinese government is changing the rules of the game. And if the same thing happened in the US in terms of big tech, these stocks would collapse also. The difference is we've been debating big tech regulation in the US for 5 years, and nothing's happened. The Chinese government never had a debate. They've just done something about it.
Chris, when you look at global equities, how much further can they go before we get some kind of correction? So this is a trillion, 4 trillion, quadrillion dollar question. Is it central banks and maybe a policy surprise that will lead to a correction, or will it be something more fundamental?
Well, a real collapse in equities, in my view, will only be caused by the emergence of a variant of COVID, which the vaccines are not effective against. That would cause a collapse. That would send Treasury bond yields back to the level we saw in the spring of last year. But in the absence of that outcome, and hopefully that doesn't happen, in my view, the only meaningful correction in equities will happen if the central banks start to meaningfully tighten. But in my view, any talk of real tapering will start a correction, and then 9 times out of 10, the central banks follow the market and stop doing whatever they were doing.
Right. So, Chris, where do you see the best value? Is there anything at the moment that looks undervalued that you want to, go ahead on?
No, right now, if I was adding to equities today, the obvious place to add is Japan. Japan is cheap. The earnings growth is fine. It's underperformed dramatically this year for no real good reason. The vaccination rate's accelerating. Yeah, for global equity investors, adding to equities today, my view is definitely Japan.
Yeah, Chris, I mean, we saw when the Prime Minister actually said that he will resign quite a big run in terms of Japanese equities. So is it because you're expecting more stimulus from now on, and how much of it is already priced in?
No, it's simply because the market's underperformed. The big problem for Japanese equities is that domestic institutions haven't raised weightings to the Japanese stocks from JGB since 1990. So Japan can only really have an outperforming moment when foreign investors start buying. But in my view, it's a good time for foreigners to add exposure to Japan, and we can have a catch-up trade in the Japanese stock market. And the topics today, I believe I'm right in saying, is at the highest level since 1991. Fundamentally, though, earnings are okay, and Japan is a cyclical trade. And if the pandemic takes a rest here and we don't get a new variant anytime soon, we should get a renewed rally in the cyclical trade in the coming months.
Chris, can you give me a sense of what you're actually selling off? So does it look, this is what you like, what don't you not like? So what do you think investors should lay off in the next couple of months?
No, in my view, investors should maintain a barbell strategy of cyclicals and growth stocks, because the key issue for equity investors is 2 things. 1, do you own cyclical or growth? And 2 is the inflation pickup we see clearly, transitory as the Fed believes, or more longer lasting. My bias is that the inflationary pressures will prove to be more longer lasting, which is why you want to own some cyclical stocks. But I also believe even if the inflationary pressures do prove more longer lasting, I don't believe the G7 central banks will be politically able to tighten in any meaningful manner. So that will continue to support growth stocks. So basically, I think you should own both kinds of stocks, growth and cyclicals. You should not own any bonds in the G7 world unless you believe there's going to be a variant of COVID which is vaccine resistant. Tactically today, though, I would definitely add to Japan.
Thank you so much for joining us. Jeffries Global Head of Equity Strategy, Chris Wood, joining us from the Jeffries Asia Forum. And later on in the program, we'll also continue our China crackdown discussion with Peter Elstrom from our Asia Tech team. Now, if you have any questions for him, just IB plus TV Go. Decision day. Investors await any changes to the ECB's bond buying program as rising Eurozone inflation energizes the hawks. We're live from Frankfurt next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's take a look at some of the key events coming up today. First of all, at midday UK time, we have Mexican CPI figures. We'll also be watching the all-important ECB rate decision, expected today at 12:45 p.m. And then at 1:30 p.m. UK time, we'll get the latest initial jobless claims. Finally, NFL fans rejoice. The U.S. National Football League season begins later today. So on to ECB, and policymakers will have to decide whether they dial down their emergency stimulus later today. Eurozone inflation has surged, but the hawks on the Governing Council may still not get their way. We've been getting perspective from some key voices ahead of the meeting.
We are in a different universe, it seems to me, in the US and in Europe. In the US, you had a commitment to purchase exactly the same amount every month, and this is a clear-cut commitment. So tapering means something. In Europe, there is flexibility.
The inflation situation in Europe is quite different from the United States. When the COVID shock came, the economy was, not performing very well. There was still a lot of slack in the economy. The inflation was too low. And so it's a very different situation from the US.
It's a short-term blip in inflation that we're seeing right now. And the hawkish ECB members, among others, the one from my own country, are once again too short-term focused, not looking through the volatility in the data, which we think the ECB at large will do.
There will be hawks being vocal on this, which is to be expected. But given their new guidance, their new outlook, it'll be very, very long time before they're in any position to tighten.
But we need to watch the doves to see if they're switching. But to be honest, even though there could very well be a reduction in the amount of PEP purchases or the purchases through the PEP plan announced this week, I don't think that Lagarde is going to do anything else but stress the dovish point.
Let's get more now from Bloomberg's Maria Tadeo. He's in Frankfurt for us. So, Maria, the ECB is expected to revise both growth and inflation projections. What will the focus be?
Yes, Francine, and when you look at GDP projections going into this meeting, the Vice President of the European Central Bank, Luis de Guindos, pretty much already hinted that they will be revised and taken upwards. A lot of this reflecting that the vaccination rollout has gone better than expected, but also this idea that, while there is still big concerns around the Delta variant, Francine, to see another big lockdown in Europe is very hard to swallow for governments, therefore is becoming less likely. But it really is the inflation print where the attention will be, especially as you head into 2023. There's a huge debate, as you played in that tape, over whether the inflationary pressures are just a one-off, whether this is transitory or not. And we have seen the hawks out in force in the past 2 weeks, saying that this is something more than just a one-off episode. Having said that, and you spoke to Christine Lagarde very recently, the official line until now has been that this is a particular episode that is pegged to specific issues, and Europe is not caught up in a higher inflationary spiral at this stage. So it'll be interesting to see whether or not that data reflects that, especially in the longer term horizon.
Yeah, it really will be interesting. And Maria, of course, we need to see how they justify the transitory effect of this inflation if it just gets higher and higher. Thanks so much, Maria Tadeo, there in Frankfurt for us. Now, joining us is Burkhard Warnhold. He's a Credit Suisse Deputy Global Chief Investment Officer who joins us on the ECB and, of course, some of the valuations out there in the markets. Burkhard, thank you for joining us. When you look at the ECB and when you look at exactly some of the challenges out there, is Christine Lagarde's main challenge actually trying not to spook the markets that tapering also means a rate hike?
Well, look, I think it's important to take that famous step back and look at this from a big picture perspective. It seems to me that Wall Street in particular is this perennial love affair with people like Paul Volcker, who was the hawk of hawks, if you will. And that blurs the view for what has changed fundamentally between years when hawkish monetary policy was actually supported by real politics. Whereas nowadays we've moved full circle, really, from an environment where Paul Volcker was a hero to one where there's absolutely no political majority, neither in Europe nor the United States or Japan, for a truly hawkish or tight monetary policy. So not only do I believe that inflation is limited, but I certainly cannot see the ECB or the Fed becoming truly hawkish or tightening monetary policy in this decade, not just in the rest of this year, Francine.
I mean, in this decade, Burkhard, that's a really pretty punchy call. Burkhard, at some point, I mean, is this actually a policy mistake? So at what point does too much stimulus, stop being ineffective, and when does it become harmful?
Well, look, I think there are some fundamental difference between today, or call it this decade, and the time let's call it the 1990s, the Washington Consensus, the time of deregulation, and where monetary policy was much more independent, at least intellectually. Nowadays, mountains of government debt, just to name one, add to that demographic aging, which is very conservative, and the deep societal and political polarization in all our societies, which leads to an environment where lobby groups from left and right are all calling for the government to give a helping hand, which differentiates this 2020s from the period of laissez-faire, if you will, of the 1990s. And so monetary policy must be seen in the greater picture of where it fits into fiscal and social policy, and therefore it being politicized much more than before, plus the ECB structurally being more easing or more dovish, if you will, because of its fiscal, because of its symmetrical inflation target, suggests that yields will remain zero-bound and negative in real terms for the rest of the year and the decade, Francine.
So, Burkhard, where does that mean you want to see? What are you buying up right now? So is there anything on the markets that you see either as undervalued or actually something that you want to get invested in because it's your genius Credit Suisse idea?
Well, that's a good question. And clearly, in contrast to last year, TINA, there's no alternative, has become a market narrative and consensus. It's not something that would surprise anybody. So what investors should really judge is, where do we go from here? It's true, we've just witnessed the longest bull streak of the last 2 decades without, the third longest bull streak actually, without a 5% correction. But the conditions are there to extend this and make it turn into the longest. We have unprecedented liquidity in the system, both in Europe and in the United States. And some sectors or themes indeed have become cheap. Let me just give you one example. Companies that contribute to the energy transition, to helping others emit less CO2, have actually cheapened this year and pose, I believe, both from a thematic as well as a cyclical perspective, a good investment opportunity.
Burkhard, thank you so much. Burkhard Varnhold there, Credit Suisse Deputy Global Chief Investment Officer. Now, coming up, Beijing continues its crackdown on the gaming industry. Reports say that China will halt approval for new online games. We discuss that with Peter Elstrom from our Asia Tech team. That's a little bit later on in the program. Now, if you have any questions you'd like to ask, just IB plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Prime Minister Boris Johnson has won a mandate from the House of Commons to raise taxes to fund health and social care. The vote in the UK Parliament passed comfortably, though 42 lawmakers from Johnson's party abstained or voted against the plans, which will increase the tax burden to its highest level on record. Now, lawyers for Elizabeth Holmes, the Theranos founder, have said she is not the villain that prosecutors have made her out to be, as her criminal trial began in Silicon Valley. Holmes faces 10 counts of wire fraud and 2 counts of conspiracy to commit fraud tied to claims of a revolutionary blood testing technology at her failed startup. Theranos dissolved in 2018 after she and former executive Sunny Balwani were indicted. And more than half of young employees in the UK say working from home during the pandemic has taken a toll on their office conversation skills. According to a survey by LinkedIn, 84% say they fell out of practice when it comes to office life, including speaking to clients and, of course, delivering presentations. The research also found that 9 in 10 bosses agreed that young people's professional development had been stunted by the pandemic. Global News 24 hours hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, I love that story. I mean, I don't know. I mean, we're not awkward, but we've also been coming into the office for a long time, right? You're kind of at the, you know, the water cooler moment, and we still talk to each other. But if you haven't spoken to anyone in 18 months, you kind of say, do I keep my mask on? Do I keep my mask off? It is a little bit awkward, even for us, maybe.
Well, I think this is such an interesting story. Like you, Francine, first of all, I was like, what skills aren't they learning? And apparently they're saying that they're not learning by osmosis. So maybe you and I are next to each other working in the studio and we absorb information from each other. But another thing I liked is we obviously heard 9 out of 10 bosses also surveyed by LinkedIn saying that, yes, it has stunted people's working abilities. But what I like the most is only half of them now say they're going to boost social events. Why aren't all of them boosting social events? I'm sure everyone wants to go out and have a good time after being locked in for a little while and away from the workplace, really, Francine.
Yeah, so true, Leanne. I'm going to say something really awkward now just to prove the point that it's been awkward for the last 18 months. Coming up, we look more on the markets. Of course, it's ECB day. And then we talk about the German elections as well. This is Bloomberg. China halts approvals for new online games. Beijing continues its crackdown on gaming, sending shares in Tencent and NetEase tumbling. From strategy to action, investors await possible changes to the ECB's bond buying program as rising Eurozone inflation energizes the hawks. And the Fed's Kaplan says strong data underpin the case for unveiling a Fed tapering plan this month. He says implementation could start in October. So good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, straight to the markets, because, of course, we look at all the central bank action through the lens of the markets. Now, there's a great story on the Bloomberg terminal saying that especially bond traders are not expecting Christine Lagarde and the ECB to actually upend anything that we've seen over the last couple of weeks. Stocks and futures are falling on economic concerns, also the prospect of reduced central bank stimulus, because we heard from Robert Kaplan. And it's really the relentless spread of the Delta virus variant that is starting to take its toll on the U.S. economy and continuing to take its toll on global supply chains. Then the story we're looking at in terms of corporate news is EasyJet. Now, the stock was down some 13%, now losing 10%. And this is about a stock sale and, of course, the fact that it would not be taken over by someone else. Now, polling a distant third just a few months ago, Olaf Scholz's Social Democrats have opened up a consistent lead of as much as 6 points. Merkel's Christian Democrats, on the other hand, have stumbled to their lowest level in the post-war era. Now, as the outgoing chancellor tried to bail out her party's faltering candidate, Armin Laschet, this week, her finance minister appears to step quicker. Here's some of the highlights.
I think we have all the firepower we need and we will use it. This is the message we give to anyone. And it was always the idea behind our fiscal strategies.
So we will have a public investment of the federal level of 50 billion euros a year in the next years. It will be a decade of high private investment and high public investment. What we are doing is, for the first time, creating a big package to fight against the crisis with the means of the union. And the Hamiltonian moment in this is that we also agreed on paying back the debt back. After the last big flood, we invested approximately 6 billion. And it will be obviously more this time, but it will be something we can afford and we will afford.
Well, joining us now is Chad Thomas, Bloomberg's Western Europe managing editor. Chad, thank you so much for joining us. So first of all, can Olaf Scholz actually hold on to that lead?
Well, Francine, it's quite remarkable, this lead that he has opened up, and it does appear that he's hanging on to it. The latest polls coming out this week actually have shown that that lead has even widened slightly, just by a percentage point or two. But the thing is, he's hanging on to it. We talked to a lot of people in Berlin for a story we have out today. My colleagues here did. And one of the things that we found out is that, we were looking at those clips of the bazooka that Olaf Scholz launched during the pandemic. And we found out from people that he had actually been planning that bazooka for some time before the crisis and was looking for a way to sort of unleash this cash into the German economy. The pandemic came along, of course, and that was his opportunity. And that has really helped him to seize the moment here in Germany and make himself really seen as the heir apparent to Merkel, his handling of the crisis, financially speaking, during the pandemic.
Yeah, Chad, what's actually strange in this election is that Angela Merkel has a successor. He's called Armin Laschet, but do the Germans actually see Olaf Scholz as her successor?
In many ways, they do, and Olaf Scholz has tried very hard to occupy that space. He's made no secrets about it. There's a photo that is very famous here now in Germany over the last couple of months, where Olaf Scholz actually posed doing this sort of Merkel pose that everyone in Germany knows that she does when she does pictures, and he did it for one of the magazines here. So he's made no reservations about trying to occupy that space. I think her successor, Armin Laschet, has struggled a bit because he has, within his own party, had to try and differentiate himself from Merkel, and that hasn't really worked well with the German public. She is still the most popular politician here in this country.
All right, fascinating stuff. And of course, that election on September 26th. So Bloomberg's Western Europe managing editor are Chad Thomas. Now, remember, you can subscribe also to Bloomberg's German election newsletter. Just head to Top Go on the Bloomberg terminal. So here to discuss the economic outlook for Germany is Dirk Schmitz. He's BlackRock's country head for Germany, Austria, and Eastern Europe. Dirk, always great to catch up. You have a great view on actually, what German investors and the German voters actually want. What do you think this election at the end of the day will be decided on? Is it, stimulus? Is it the economy? Is it personality? Is it being kept safe for, continuity?
Good morning, Francine. Thanks for having me. Well, it's all of the above, I have to say. Obviously, the personalities, they play a crucial role. We have every night, we have a talk show with all the candidates here on the German television. But at the same time, people are obviously looking at their own economic situation. How is their own economic situation either improving or worsening? And what does play a role here are obviously energy prices. There's a big discussion about petrol prices, for instance, about prices for electricity. So that really affects, every German in their own household, and that will play a role as well.
So what does it mean, first of all, Dirk, depending on the kind of coalition that we see, what does it mean for investors in Germany? How different could German businesses, German taxes look?
Well, there's a consensus here in Germany that obviously there's a number of different coalitions is possible right now, and it's too close to call. You've just shown the polls. The polls are very close. And by the way, we have all learned not to trust the polls too much over the last few years. So nobody knows really what kind of government coalition will be formed after the general election. But there's a consensus here in Germany that most of the possible scenarios will not change the course of Germany too much. With one exception. I mean, if the Linke, the left party, will be part of the government, then some people do have some concerns about, the further course of the German economy. But for all other scenarios, people are not too worried. Yes, there might be different things might be important to different coalitions, but the general course of the German economy will stay the same.
So, Dirk, what do you think the German economy needs? If you look at, some of the expectations, I know there's a huge green transition underway. How much will that accelerate in the coming years?
Well, I mean, the German economy is facing some of the global challenges, and then in addition has some domestic challenges. I mean, the global challenges are very clear. I mean, obviously, we are still in the middle of a COVID crisis. We need to deal with that. It's looking quite good, but we're just, getting into fall, getting into winter time. So we have to see if there are further restrictions due to COVID. Secondly, obviously, we need to deal with the debt burden that has been accumulated during the COVID crisis. Here in Germany, debt to GDP ratio went up by 10 percentage points, and we need to look at that. The second global challenge that we all have is obviously climate change. We need here in Germany and in many, many other countries, a lot of investments, a lot of new laws and new regulation in order to tackle climate change. So that is no different here in Germany than anywhere else. And then there are also some domestic challenges. One of them is a reform of our state pension system. We still have a pay-as-you-go system, but obviously we have a demographic change. In the 1960s, 6 laborers were supporting 1 pensioner. Right now, it's only 2 laborers supporting 1 pensioner, and that ratio is decreasing every day. So this will come to a halt. We need to reform our German pension system. We need to go to a capital markets-based system. So that is very clear to us. And in addition, I would say there are also some domestic challenges, about investments into infrastructure, whether it's digital infrastructure, whether it's school education. The COVID crisis has shown that we are lagging behind in some of those areas.
Yeah. Dirk, if you look at, the ECB decision today, how will that actually change, when Angela Merkel goes? First of all, how does Europe change under the new coalition, the new chancellor? And what does it mean, for example, presidents at the ECB?
Well, Angela Merkel going obviously will leave a gap. And it doesn't really matter what your opinion is of Angela Merkel, whether she's done a good job or a bad job over the last 16 years. But if one head of state leaves after 16 years, that will leave a gap. And the successor will struggle, will struggle to find his or her feet, and it will take some time of readjustment. But I think in general, Germany is well positioned for the future. So I do not worry too much about the future government and getting to grips with those challenges that we just spoken about. The ECB is the ECB. It's an independent institution, and they steer their own course. And obviously, we all have been dealing with a low interest environment for quite some years now, and we don't foresee any immediate changes to that. So we are adjusted to that.
Yeah, but Dirk, how does the ECB actually navigate some of the hawks that often come from countries like Germany, also at the same time keeping the markets on side?
Yeah, the ECB is an independent institution. They need to look at, obviously, their own parameters. I don't think that any future government coalition will be more difficult or less difficult for the ECB coming out of Germany here. So I don't really foresee any big changes there.
All right, Dirk, thanks so much. Dirk Schmitz there, country head of Germany, Austria and Eastern Europe at BlackRock. Now, coming up, Beijing continues its crackdown on the gaming industry. Reports say China will halt approval for new online games. We discuss with Peter Elstrom from our Asia Tech team next. If you have any questions you'd like to ask them, just IB plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, EasyJet has rejected an unsolicited takeover approach and said it wants to raise more than $2 billion in funds. Let's get more with Ritika Gupta. Hi, Ritika. So how are the markets actually reacting to the news?
Yeah, Francine, a lot of news here in the aviation sector, and a lot of it down to EasyJet. And you can see that down some 10% now. A lot of the downward pressure really off the back of that rights issue, £1.2 billion. It says it's trying to create a buffer here for what it sees could be some rough winter months, and it wants to position itself for when that travel demand does start to pick up. But a lot of it also down here to the M&A action, that they said that they had an unsolicited takeover approach. They didn't mention who it was, but Bloomberg News are now reporting that the mystery suitor is in fact Wizz Air. This is the Eastern European carrier, and you can see those shares down some 4%. This was apparently a all-stock takeover offer, but EasyJet, they say their board unanimously rejecting this, and that offer has been withdrawn, Francine.
So, Ritika, last night we also got results from GameStop. What's the pre-market move looking like?
Yeah, real rough ride for GameStop after those earnings. And you can see pre-market extending those losses here down some 6.5%. They lost about 11% of their market cap yesterday. This after a bigger loss than was expected. They lost 76 cents per share. They were expecting 67 cents per share, but they were also expecting that they would get more news on that takeover or that turnaround plan, but they got few details. They said that they want to move towards becoming more of an online merchant, but they didn't even take questions on that analyst call. Still, though, if we do look at the fundamentals, you can see that sales continue to improve. We are up some 26% year over year. But Wall Street still quite pessimistic here. They have a price target about $88 a share when we are trading more than double that, because those meme traders bidding up this stock still up some over 900% year to date, Francine. Pretty incredible.
It is pretty incredible. Ritika, thank you so much. Ritika Gupta there with the very latest on EasyJet and GameStop. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Online gambling company 888 Holdings is to buy the international operations of bookmaker William Hill after seeing off rival bids from private equity. The deal gives the units an enterprise value of £2.2 billion. Las Vegas-based casino giant Caesars Entertainment completed its acquisition of William Hill in April. It is selling the operations to help pay down a debt. Now, Bill Gates is taking control of the Four Seasons hotel chain in a bet the hobbled luxury travel sector will rebound from a pandemic-induced slump. His Cascade Investment agreed to acquire a stake in the hotel company from Saudi Prince Al-Walid bin Tali's Kingdom Holding Company. Cascade will pay $2.2 billion in cash to boost its share in Four Seasons to more than 70%. And European farmers can now feed bugs to their chickens and pigs in a major boost to the growing insects industry. The EU rule change comes into force this week. Rabobank estimates the market for insect feed has the potential to reach 500,000 tons by 2030. And that's your Bloomberg Business Flash. Francine.
Leanne, one of my least proud mom moment is actually buying insects for $3.99, and I kind of they've been in a cupboard for 2 months, hoping that the family will forget it.
Well, maybe you should cover them in chocolate, Francine, and then they'll eat them and not even know what they've got. Now, that would be a really proud mom moment.
I'm not sure. We'll try them live, you and me, Leanne.
Yeah, you and me can do it, Francine.
There you go, in a couple of weeks or years. Thank you, Leanne. Now, Chinese regulators tell gaming companies to de-emphasize profits and to comply with new Beijing regulations for the industry. According to state media, government agencies called the meeting to convey plans to step up supervision and start checks on illegal behavior. In the past hour, we've had reports that China will halt approvals for new online games. Well, joining us now is Peter Elstrom from our Asia tech team. Peter, what exactly happened?
And so, as you mentioned, the four government agencies called the biggest gaming companies into a meeting to talk about stepped-up supervision over the industry. It's not a complete surprise that they are tightening the screws on the industry. It was just a couple weeks ago that they said they were going to limit the amount of time that children can play games to only 3 hours a week. But the language that they used in this meeting was pretty sharp. As you mentioned, they're not supposed to solely focus on profit anymore. They're supposed to help the government prevent minors from becoming addicted to games. And as you mentioned, there was this report about possibly a suspension of new game approvals, which would be a pretty big blow to the industry. That hit stocks pretty hard today. In Asia, Tencent, the biggest gaming company, fell 8.5%, and NetEase fell 11%.
So what does this actually mean for the game companies longer term, and how does it fit into the broader crackdown in China?
Well, clearly the Communist Party is looking to limit the amount of time that kids spend online with these games. Tencent and NetEase have both said that the amount of revenue they get from minors, underage kids, is relatively small. The question is whether this is going to spread beyond a relatively niche market into a broader crackdown on the companies. China is the biggest games company in the world, so their fortunes are very closely tied to what happens in the future here.
Peter, thanks so much. Peter Elstrom there from our Asia tech team. Now, coming up, to mandate or not to mandate. Many Wall Street firms were expecting to see staff back to the offices this month, but the realities of vaccine requirements paints a different picture. We'll have more on that next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So let's turn the latest news on the virus. Today's big take breaks down the stark divide over U.S. corporate vaccine policies. Later this month, we're also expecting President Joe Biden to call a meeting on the global scarcity of vaccines. This is as the Delta variant threatens economic recovery for various parts of the world. Well, joining us now is one of the authors of The Big Take. Of course, he's our expert on COVID. He's Bloomberg Intelligence's Sam Fazeli. So, Sam, it does seem that actually a lot of companies are going at it different ways. So Cathay Pacific yesterday went as far as saying, look, if you're not vaccinated, you have to stop working for us. Others, even a lot more cautious about letting unvaccinated people in the office. Where's the divide?
Yeah, good morning, Francine, and thank you for those very kind words. I mean, you've got to accept the fact that there are some places, some jobs where you cannot work from home. I mean, if you're an air stewardess or air steward, you can't really work from home. So then it becomes a bit more complicated. But in positions where you can work from home, I think I've seen some companies say, look, if you don't want to be vaccinated, they're not going to force you. You can work from home. I am not sure how that's going to pan out over the long term in terms of people maintaining their jobs, keeping their pay going up as much as somebody who turns up in the office, etc. But certainly, I'm pretty sure that the 2+3 or 3+2 days per week is going to become a lot more normal than any of these other variants.
Sam, what else are we looking at? So, we talk about the virus, almost day in, day out. I don't know whether it's variations that are on your radar, whether it's booster shots, still one of the main questions, or whether it's actually just, that we need vaccines in kids, given the number of infections of children in the U.S.
Mm-hmm. I'm going to say all of the above. If you think about all the issues that people are worrying about, the new variant now, only a little while ago, we were talking about epsilon, lambda, gamma, delta, alpha, everything, right? So we have to learn that this virus continues to mutate and that we are still dealing with vaccines that if they are fully effective, and goes back to the booster or third shot, we are going to be able to manage to reduce the impact of the virus. And of course, onto that third shot, I call it the third shot most of the time, because I think we might be coming to the conclusion that actually these vaccines were never two-dose vaccines, at least those of the mRNA vaccines, and always required a third shot, which then comes to the conference that you mentioned, President Biden having. If that is the case, then what does that mean for the global rollout of vaccines and for the developing world?
And so what does it mean, Sam? Does it mean, do we need to wait to make sure that emerging markets have enough booster shot or have enough vaccine first?
Yeah, so if it truly ends up being a vaccine for either company, Pfizer, BioNTech, or Moderna, that requires 3 doses to be fully immunized, then you have to assume, therefore, as opposed to needing 2 times, say, 8 billion doses for the world, we're going to need 3 times 8 billion doses. So what is the right thing there to do? If in the United States or the United Kingdom, you have significant drop in efficacy against severe disease, I think that's going to be very difficult to tell people that, I'm sorry, I'm going to send your vaccines to another country so that they can have the first and second dose, even if it's the ethical thing to do.
All right, Sam, thank you so much. Our Sam Fazeli there with the very latest on boosters and vaccines. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kailey Leinz will be in New York. It is ECB day. We'll also spend a lot of time looking not only at the spread between Italian BTPs and German Bunds, but we'll also talk about treasuries. We had a pretty bold call from HSBC's Stephen Major saying that he thinks when you look at the Fed, even 2023 may be too early for a Fed hike. So we'll talk about that. This is Bloomberg.
I would love to see us sooner rather than later start taking our foot off the accelerator.
We don't follow the market slavishly, but the market curve does suggest that.
We are in a different universe, it seems to me, in the US and in Europe. In Europe, there is flexibility.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, September 9th. Our top stories today. Decision day. The European Central Bank will have to decide today whether the recovery is strong enough to slow down the monetary stimulus. Game over. Well, China tells game company executives that they need to end what's called their solitary focus on profit. And cryptocurrency crackdown, the head of the SEC is showing how far he'll go to regulate an industry he once called the Wild West of finance. So there are quite a lot of stories going on. Kailey, if you look at the markets, they worry, of course, about pressure from economic growth. But at the same time, markets also believe that whatever the ECB will say, they're hoping it won't spook the markets.
Yeah, we're waiting and watching for that decision in just a little under 3 hours' time, Francine. But as for what we saw in the Asian session, it was mostly risk off. A lot of the major equity benchmarks did end the day in the red. You had the Kospi down about 1.5% in South Korea. Even Japanese equities ended their 8-day winning streak because emergency virus measures have been extended until the end of the month. China also ended lower after factory gate inflation rose to the highest in 13 years. And your big underperformance came from Hong Kong. The Hang Seng Tech Index actually falling 4.5% because, you guessed it, regulatory concerns out of Beijing after Chinese regulators called video game makers together and said they need to stop prioritizing profit. Tencent is one of those, and those shares fell 8.5% in the Asian session. Another stock to watch, of course, is China Evergrande, the world's most indebted property developer. A lot of concern around its financial health saw the shares plunging to its lowest since 2015. But right before the close in Asia, we got news that China has approved Evergrande's plan to renegotiate debt with creditors and banks. So the stock pared some losses. We're down just 4.3% at the close. Finally, in foreign exchange, I would note the Japanese yen is getting a haven bid today. It is stronger against the dollar by about 0.3%, right now trading at 109.89. As for the picture here in the U.S., we are looking at potentially a third down day for equities. S&P 500 futures right now down about 1/3%. But I would point to the small caps as well because they have underperformed over the last 3 days. Right now, Russell 2000 futures down by nearly 0.6%. You are seeing a bit into the bond market, down nearly 2 basis points on the U.S. 10-year yield to 132. And finally, I would just point to corn futures, Matt. They have hit their lowest since January. The WASDE report comes tomorrow, and traders are betting that there may be a little bit more supply than maybe the market had anticipated.
All right, very interesting, Kailey. I am looking at a European map, and you're looking at it as well, unless you're joining us on Bloomberg Radio, in which case, welcome. That is red across the board, especially in the UK. Big losses there, more than 1%. In fact, typically I like to highlight the Stock 600, the broader European index. Today I'm just going to show you the FTSE to start off with because it's the biggest loser in Europe on news that Boris Johnson is going to raise taxes. The Conservative Party pushing through a tax increase in order to pay for national health care, going against a campaign promise that Boris Johnson made. Nonetheless, the market does not like it, and you can see that the FTSE is down 1.3% as it really will hit dividends, a jump of 123 basis points in taxes, 125 basis points on dividends. You can see the German bond yield coming down a little bit. We're waiting for an ECB decision. As Francine said, we have a great guest on later who thinks that the ECB needs to ramp up its bond purchase program rather than reduce it, as we've heard from really a chorus of ECB governors lately. You can see the euro right now trading at 118.32, the pound at 138.09. Watch especially for movement in the bunds and movement in the euros, Francine, when we get this ECB decision later on today.
Yeah, 100%. And Matt Miller, on that UK tax increase, I saw actually a survey saying that 50,000 jobs could be at risk. Again, it could not be true, but something that we need to keep an eye on. I'll look at what else is coming up today. Now, it's 7:45 a.m. New York time. As Matt Miller was saying, it's ECB rate decision. Now, the central bank will have to decide whether the recovery is strong enough to warrant an imminent slowdown in monetary stimulus. President Biden also giving a speech on COVID today. This is to outline a 6-pronged strategy to get the pandemic under control. Then the German finance minister, Olaf Scholz, speaks at the Handelsblatt banking summit today. He's really gaining in the polls. U.S. initial jobless claims are out at 8:30 a.m. New York time. And for all the NFL fans out there, especially Matt Miller and Kailey Leinz,
yes,
they can rejoice. Yes, the U.S. National Football League season begins later today. So you can watch the ECB and then a bit of NFL. Life is near perfect.
Yes.
It's ECB day. The central bank will decide whether the recovery is strong enough to warrant an imminent slowdown in monetary stimulus. Let's get more on this with our Maria Tadeo. So first of all, Maria, it'll be very difficult if they do change anything in terms of expectations, bond buying, not to freak out the markets.
Yes, Francine. And look, when you look at today's decision, the market is still very much on significantly higher. Remember, that is a reference that investors use to try to benchmark and know how much the European Central Bank is buying under the PEP program. Now, if that gets removed and it's no longer significantly higher, it becomes something that perhaps is softer or just says we're going to continue on a constant basis, but it's not significantly higher. It could be interpreted as a form of taper. Now, the officials that I've been speaking with here in Frankfurt, what they say is the challenge for Christine Lagarde is to make it clear that this is not a taper, that this is tweaking, perhaps recalibration. And the reason for this is that the European economy is on a stronger foot and financing conditions have improved as a result. It's not a taper. It's very different to what the Fed is doing in the United States. And perhaps she may want to make it clear, and this is where the focus will be too, that the full package will be used perhaps until next year, March 2022, and make it clear that when it comes to stimulus, the European Central Bank is still very much put, even if the purchases do get slowed.
You know, we're going to have Elga Bartsch on a little bit later from the BlackRock Investment Institute. She argued in an FT op-ed recently that the ECB should ramp up its asset purchase program. Is she in the minority?
Well, you know, I think that we talk about the hawks being out in force, kind of saying we worry about inflation, perhaps the worst of the crisis is over. But if you look at the track record from this ECB, from Christine Lagarde, every time there's been a big decision, she does have an inclination for a dovish surprise. It's never been the opposite. We also know from a number of central banks that may represent the dovish countries and the ECB that they feel that this is not over yet, and there is still uncertainty going into the winter because of coronavirus and the Delta. So overall, you know, when you look at potential surprises, when it comes to Christine Lagarde, it's always dove. It's not a hawkish tilt.
Maria, thank you so much. Maria Tadeo there in front of the ECB in Frankfurt. Now, China's firing another shot at the gaming industry. According to the South China Morning Post, Beijing will halt approvals for new online games. Now, that's after regulators summoned companies, including Tencent, to discuss enforcing limits on video games and ending their focus on profit. Let's get straight to our China expert, Tom McKenzie. Tom, I mean, when you look at, you know, why they're cracking down, they want them to remove obscene and violent content, talking about unhealthy tendencies. Is there a danger that actually they'll go too far and, you know, the Chinese citizens will just say enough?
Well, there's that angle, certainly, in that these are incredibly popular games. Hundreds of millions of people play them on a daily basis. We've already seen, of course, they've limited the numbers of hours for children to 3 hours per week that they can play these games. So that's one element that's worth highlighting for sure. The other part of this is the secret sauce for one of the most established, biggest, most powerful companies in Asia, Tencent. Okay, so they get about 30%, about a third of their revenues from gaming. What do they do with that profit? They channel it into other parts of the business, innovation, AI, technology, that of course powers a lot of the ecosystem, the tech ecosystem in China. So that's the other flip to this in terms of the danger. But you're right, this is about content, it's about addiction. And when it comes to content, effeminate games is one thing that they flagged as a concern. So they're trying to mold the minds of China's youth and they're trying to reduce the addiction. But the impact on Tencent, we've seen that in stock price today, broadly across the HS Tech Index as well, falling heavily on the back of this move. NetEase, one of its big competitors, also pressured by this. So yes, it continues and there are dangers associated with this.
Tom, talking about the Chinese economy more broadly, we also got inflation data overnight. Producer prices up 9.5%, the fastest growth since 2008. How much blame can we put on just commodities for that?
Well, commodity seems to be a big part of it, and that's despite the fact that you've had officials over the last few weeks and months trying to jawbone pressures or prices down lower, putting in concrete measures as well in China to try and reduce things like speculation in the commodities market. So that is a big component of it. What is interesting is the consumer prices actually softened. So that points to a question mark about the demand, the strength of demand in China. One part of this is these producer prices don't seem to be being passed on to the consumer. Potentially good news, but maybe that suggests that the corporate sector is able to absorb some of that margin pressure. For how long is a question, but also how much of that is down to the fact that you have very tepid demand. There's a flow through, of course, to the US as well. Standard Chartered saying that, look, this ties, there is a link between Chinese PPI and consumer prices in the US. That is one to watch. They think it's going to go higher from here.
Yeah, it will be interesting to see how this reads through to the CPI print here in the US next week. Thank you so much to Bloomberg's Tom McKenzie. Now turning to Washington, Treasury Secretary Janet Yellen's team rejects debt prioritization should the government exhaust its traditional measures to avoid a default induced by the debt limit. Jack Fitzpatrick, Bloomberg government reporter, joins us now. So, Jack, Yellen also sent a letter to congressional leaders yesterday saying the government could run out of money sometime in October if the debt limit isn't raised. Republicans say we won't vote for that, push it through reconciliation. Nancy Pelosi said yesterday that is off the table. So what can be done here?
Yeah, so Democrats already put out their reconciliation instructions that allow them to pass some legislation through the Senate with a simple majority. That those instructions for what committees need to work on did not include anything on the debt limit. Speaker Pelosi reiterated that yesterday, saying this is not going to happen through reconciliation. Technically, they could change their minds if they really lost the game of chicken to Republicans. They could go back and amend their reconciliation instructions, but that would be a pretty time-consuming process that would require more markups, another series of amendment votes on the instructions themselves in the Senate. So it really does look like the Democrats are not blinking on this. They'll need 10 votes from Republicans in the Senate to reach 60 on a debt limit measure. And the question is, what do they attach it to? What is their strategy to get this on the floor in the House and Senate? They haven't said that yet. There's been some speculation that maybe they could tie this to a government funding measure, a stopgap, because the government funding runs out September 30th. Pelosi did not confirm that, so it could be tied in with something along the lines of government funding, potentially supplemental funds for hurricane aid, something along those lines. But the strategy is not entirely clear right now, other than that Democrats are demanding that they're going to do this in a way that would require some Republican votes.
All right, well, the clock is ticking. Thank you so much to Jack Fitzpatrick of Bloomberg Government. Back to the markets now with a look at some stocks moving in pre-market trading here in the U.S. And we don't often talk about fundamentals when we talk about meme stocks, but the original meme stock, GameStop, did report after the bell last night, and the picture wasn't too pretty. A wider loss than expected. Plus, on the conference call, which only lasted 10 minutes, executives didn't outline a forward strategy and didn't take any questions. So that stock is down 7.3%. It's a better story, though, for Rocket Lab, which also reported after the bell. First half revenue up 237% on a year-on-year basis. That stock is up 5.7%. And we also got a report last night from Lululemon, of course, the yoga wear maker. It topped expectations in the second quarter. Third quarter guidance also beat. Plus, the company raised its full year forecast. A lot of people still working from home, Francine. Therefore, a lot of people apparently still buying a lot of athleisure. That stock is up nearly 14% before the bell.
I know. I can tell you for free that actually in London, suits are out, athleisure wear in. Coming up, we talk ECB with Elga Bartsch, BlackRock Investment Institute head of macro research, and then a little bit later on, a conversation on cryptocurrencies and on the SEC with Antoni Trenchev, NEXO co-founder. This is Bloomberg.
We are in a different universe, it seems to me, in the US and in Europe. In the US, you had a commitment to purchase exactly the same amount every month, and this is a clear-cut commitment. So tapering means something. In Europe, there is flexibility.
The inflation situation in Europe is quite different from the United States. When the COVID shock came, the economy was, not performing very well. There was still a lot of slack in the economy. The inflation was too low. And so it's a very different situation from the US.
It's a short-term blip in inflation that we're seeing right now. And the hawkish ECB members, among others, the one from my own country, are once again too short-term focused, not looking through the volatility in the data, which we think the ECB at large will do.
There will be hawks being vocal on this, which is to be expected. But given their new guidance, their new outlook, it'll be very, very long time before they're in any position to tighten.
But we need to watch the doves to see if they're switching. But to be honest, even though there could very well be a reduction in the amount of PEP purchases or the purchases through the PEP plan announced this week, I don't think that Lagarde is going to do anything else but stress the dovish point.
Well, a few guests are speaking to Bloomberg ahead of the ECB meeting today. We'll get on to ECB in a second, but we're just getting some breaking news. We don't know much about it yet. We're trying to get to the bottom of it, but we understand from German prosecutors have confirmed raids in the finance and justice ministries in Germany. I know, Matt Miller, that we're looking into it just to get to the bottom of what it is. It could or could not actually be in relation to Wirecard, right, Matt?
It is not about Wirecard, apparently, and I think it's fascinating that the German prosecutors are raiding, it bears repeating, the German finance ministry and the German justice ministry. So German prosecutors are looking into two federal ministries responsible for, well, justice as well as finance. I think we're going to continue to follow this story and give you all the details. What I do know right now is that it is not about Wirecard, Francine.
Yep, so we'll have plenty more, of course, on that. And this could be significant or not. We don't exactly know. We'll get to the bottom of what it means, but for the German election on September 26th.
I think if a prosecutor raids a country's justice ministry, it's definitely significant, right?
It is. I don't know why. In Italy, it happens definitely more often than in the UK. So it depends on exactly what they're looking at, Matt. Let's get back to the ECB. Marcus Ashworth, Bloomberg opinion columnist, joins us. Marcus, so we've been distracted by this German prosecutor actually looking at some accounts in the finance and justice ministers. It is quite exciting, but the ECB could be quite exciting. I mean, they could actually upend. I know we keep on talking. I know this is very cryptic. You know, significant higher pace is kind of the buzzword of the ECB. And it's, you know, you need a crystal ball to understand exactly what that means on when they stop doing PEP.
I don't think the word significantly is going to last, but they'll probably just take that out. But I really have issues with what Jean-Claude Trichet says, and indeed Peter Pratt as well. This is tapering. If they reduce it from 80 billion a month to 60 billion a month, it's tapering. You know, it doesn't matter. They should be tapering here because they've increased it when they needed to, and now the economy is roaring ahead. This is a perfect time, and probably the only time they'll get to have some reason. Because at the end of the day, in March, the big debate will be what happens when PEP goes, and they need to have something in place. To lose a little battle perhaps now to give the Hawks a win, perfect. As long as you can get it down to, say, 60 now, and then perhaps down towards 40 or 50 going forward for the rest of 2022 and 23 if needs be.
It's interesting, you know, Elga Bartsch is going to join us later from the BlackRock Investment Institute, and she says, or she wrote at least earlier this week in the FT, that the ECB needs to ramp up its asset purchase program, that now is not the time to slow down, and that they need to keep a firm eye on the need to raise medium-term inflation. Isn't this a case of the ECB needing not to take its eye off the ball, actually, Marcus? Because European inflation has never been as easy to raise as, I mean, just look at how difficult it was for Mario Draghi during his term.
Well, then we should all just give up and go home and forget this sort of whole point that they actually are trying to manage an economy and not necessarily constantly pour in ever more negative rates or huge more trillions of TLTROs and QE each month. Look, at some point there has to be some balance. I think Lagarde will do this very smoothly, actually. There might be a stealth taper. Bear in mind that in the month of August they were down to 65 billion from their supposed significantly higher 80 billion. It's a nice gentle glide. If they could keep it around that level for the next couple of months or so into Christmas and then have the big decision in the December meeting, that's the way to do it. I'm sure that's exactly what she'll do. But calls for it to go on forever and ever more, it's not achieving anything other than keeping the spreads tight and keeping their financial conditions favourable, as they call it. That's great. It's doing its job. Until it doesn't, then they should gently let it glide down a bit. So if needs be, if things turn bad again, they could put it back up. And that's the whole point.
All right, Marcus, thank you so much. It'd be great to actually get Marcus on with Elga, who thinks otherwise. Marcus Ashworth there of Bloomberg Opinion. More ECB talk. We'll also look at treasuries and, of course, Chinese tech. This is Bloomberg. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now let's get straight to the Bloomberg. First word news, and EasyJet has rejected an unsolicited takeover approach. Now the British discount airline says the offer was conditional all stock and had a low premium. Well, EasyJet wouldn't disclose the name of the bidder. Now, the airline plans to raise more than $2 billion as a buffer to see it through a return to vacation travel. And more than half of young employees in the UK say working from home has hurt their office conversation skills. Well, that could potentially harm their career and prospects and pay. The survey from LinkedIn, it also found that 84% of those polled felt out of practice when it comes to office life. I don't know, what is office life? It's kind of like you chat around. I mean, some people never knew really how to do chit chat, Matt Miller. You're not one of them.
Yeah, no, I mean, I chit chat a lot. And actually, I've been in this office for the past year and a half, pretty much just with the security guard. He's not my security guard, obviously. I don't need a security guard. But, you know, the two of us have become really close friends throughout the pandemic.
There you go, Matt Miller with the security detail chit-chatting. We should actually film it and put it on for the young peeps that have to go back to the office. Coming up, we talk about the ECB with Elga Bartsch, BlackRock Investment Institute head of macro research. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Matt, I know we need to talk about, of course, some of the spreads between Italian BTPs and German Bunds because of the ECB, but also that news breaking just minutes ago about prosecutors raiding the finance and justice ministries in Germany.
Yeah, I mean, we don't have the details on that. It looks like this has to do with a special unit in justice that investigates money laundering, and I'm not sure, as you said, I'm not sure how serious this is, but I can tell you that if a special prosecutor raided the Department of Justice in Washington, D.C., that would be a big, big deal. It's terribly unlikely that would happen. I've never heard of that happening because obviously the Department of Justice is responsible for these kind of things in the first place. But we'll find out what happens here. Then you get back to the ECB and to the Italian-German spreads. This, I think, is really interesting because we haven't seen those spreads move much at all. I think they're stuck around 100 basis points, and it'll be interesting to watch today.
Yeah, I can't wait to speak to Elga Bartsch of BlackRock. Kailey, how's it all playing out in the markets right now?
Well, obviously, it was a weak session in Asia, and that weak handover is reading through into the European session and futures trading here in the U.S. Right now, the stock 600 is just off of session lows, but still down about 0.4%. Almost every single sector within the index is in negative territory. Actually, the loss is being led by travel and leisure, with that benchmark down about 1.7%. When it comes to S&P 500 futures right now, we're down just about 0.2%. It does look like small caps once again will underperform today, and you are seeing a slight bit into the bond market. Yields down a little more than a basis point on the U.S. 10-year Treasury to 132. And of course, as you were just talking about, we have to watch European bonds as well today. And of course, the euro ahead of that ECB decision in about 2 hours and 15 minutes time. The euro right now stronger against the dollar by about 1/10%, trading at 118.31. Of course, the story in the Asian session also was the continued crackdown on Chinese game makers and Chinese regulators telling them not to prioritize profit anymore. And that is weighing on sentiment for Chinese companies listed here in the U.S. The ADRs of JD.com, Alibaba, Baidu, and Didi all down between 2.5% and 4.5%. So heavily weighing on sentiment for some of those Chinese companies in pre-market trading. But let's get back to the ECB's decision later on today and what we should expect. Here with a breakdown is Ritika Gupta. Ritika.
Yeah, Kelly, it is decision day, and it could be a very interesting one here because ECB policymakers could decide whether to slow down those asset purchases in the fourth quarter. They're expected to leave rates unchanged. In terms of bond buying, they buy about 80 billion euros of bonds per month here, but that was stepped up in a big way in March, and there's been so much debate about this. Increasingly, these hawks coming out and saying they need to slow down these asset purchases. They're saying the economic growth or the recovery is looking strong with the vaccination rates and inflation. Inflation being a big one here. We sit at 3% in the Eurozone, the highest in a decade, way above that 2% target. Now, Christine Lagarde is expected to say she thinks inflation's likely to be transitory, of course, but a lot of this could also be down to their new projections as well, that inflation projection for 2023 as well, Francine.
Yeah, I mean, the big one that, of course, we need to watch out for is also that call by HSBC's Stephen Major about the Fed not doing anything until 2023. And it hasn't really moved the markets, but we'll see if it actually gathers some steam. Ritika, so joining us to talk about all of this is Elga Bartsch, head of macro research at BlackRock Investment Institute. Elga, thank you so much for joining us today. You have a little bit of an outlier call in that actually you expect, or you think that the ECB should maybe do more than they're doing right now. Discuss.
Yes, indeed. So one thing is about the discussion that is live at the Governing Council at the moment around the pandemic emergency purchase program and the pace of that. That's more of an operational decision. But as you can see from the way that the markets are taking this as a tapering decision, i.e. something that has a signaling function within the monetary policy stance, I think the ECB needs to tread very carefully there, and the improved financial conditions that we have seen over the summer might not stay into the fall. But beyond that, the more important question for me is about the regular asset purchase program that will take over once the pandemic emergency is judged to be past us. And I think that needs to be stepped up, because currently that's only running at about 20 billion per month.
But Elga, what do you see actually in the real economy that makes you worry that they take away the punch bowl too soon? A lot of economists and a lot of investors think that actually at some point, and we're close to that point, not only does monetary stimulus become ineffective, it becomes harmful.
I disagree with that, and I do think that for the ECB, really the focus needs to be on the medium-term outlook for price stability, and that shows consistently the ECB not meeting its own price stability objective, especially after the adoption of a new policy framework. And that means that more is necessary, not less. And one of the key differences with the US or the UK, indeed, is that those central banks are able to show inflation over the medium term in line or above with their definition of price stability.
What happens to the euro here, Elga, if they do start to taper before the Federal Reserve, after the soft jobs number out of Washington? I mean, doesn't that give strength to the common currency?
There could indeed be a knee-jerk reaction, but I would take the view that this shouldn't be looked at as a tapering decision, i.e. something that prepares the path towards rate hikes eventually. This is really an operational decision that the Governing Council is taking in consideration of the current financial conditions in the euro area broadly defined and the inflation outlook. And a number of members of the Governing Council have commented that over the summer, those financial conditions have improved materially as bond yields have dropped. My concern is that that might not be lasting into the fourth quarter, especially if the Federal Reserve indeed moves towards tapering.
Yeah, I can understand why you're worried about that, but it does look like they may reduce their asset purchases. I know they want to paint that as not tapering, but if they are reducing the amount that they buy every month, isn't it, unquestionably tapering?
Well, that is why I think that you need to wait with reducing the pace of the PEP purchases until you can say what you're going to do with the program that is driven by the macroeconomic outlook, which is the regular asset purchase program. Remember, PEP only came into being because of the dislocations that we saw in euro area financial markets in the wake of the pandemic.
Elga, if the market misinterprets what the ECB is doing and it results in tighter financial conditions, what then?
Then the ECB might regret dialing down the pace, which is why I would sort of carefully contemplate sort of just keeping the pace steady, or if there needs to be a compromise, maybe do a very small reduction in the pace. And again, that I think I'm worried about the signaling and it being misinterpreted as tapering, i.e. a monetary policy decision rather than an operational decision.
So would that misinterpretation potentially by the markets be the biggest risk to you at BlackRock being overweight Europe?
I don't think it's only based on the monetary policy side. There are a number of other factors why we prefer European equities at this stage. One is that it's really the European activity restart that has gained a lot of momentum, and that's where we see earnings upgrades. And so as the baton of the activity restart post the pandemic is being passed on, it's now Europe's time to carry it, and that's sort of why we think it's a good place to seek some cyclical exposures.
Elga, thank you so much for joining us today. Elga Bartsch there, head of macro research at BlackRock Investment Institute. Now, coming up, we talk crypto and Bitcoin with Antoni Trenchev, NEXO co-founder. We'll look at some of the allegations that Coinbase chief executive put to the FCC. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later on today, an exclusive interview with the ESPN chairman, Jimmy Pitaro. That's at 1:30 p.m. in New York, 6:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz in New York. Now, the U.S. SEC Chair Gary Gensler is threatening to sue the crypto exchange firm Coinbase if it lets customers earn interest on their tokens. This sends a warning to the entire industry as to how far the commission is willing to go to tame the market, or really just to regulate everything it sees. Joining us now is Antoni Trenchev, co-founder and managing director of NEXO. Antoni, what do you think about the Wells notice served to Coinbase?
Well, finally, the SEC is out of their slumber and they're giving some guidance, although in a pretty aggressive way. And quite frankly, we at NEXO have always welcomed regulation. I have authored pieces on the topic. And, you know, since we launched 3.5 years ago, we conducted our business as if we are a traditional institution and not a crypto fintech, applying for all the licenses. And we have been in contact with various different regulators. And let me tell you what they worry about. They worry about consumer protection in two aspects. First of all, how is your offering structured? Is it a security? And if so, you know, have you done the disclosures? What and how are you selling your product? And the ultimate authority on whether something is a security is the SEC. If you disagree, you have to go to court over them. Yeah. And the second thing they're worried about is the business model itself. And, you know, we have gone through the trouble of securing a world's first in the crypto lending world, and that is real-time proof of reserves audit, which shows you that assets exceed liabilities at all times at NEXO and investors are protected.
Just to be clear, you still have products that offer a return, right? You've got crypto products where
yes,
your clients earn a yield.
Yes, we do. The difference being that us, NEXO, we operate in 200 different jurisdictions, and the United States is, you know, a market for us, whereas, you know, Coinbase and some of the other guys, that's all they have. It's predominantly the U.S., so we differ in that perspective. We'll continue to offer that product, you know, in the jurisdictions where we can do that.
Antoni, how many of your clients or customers have actually had trouble accessing their accounts? So every time you come on, I get, you know, hundreds of tweets in certain cases saying they're struggling with that. I mean, is it a problem that you've had in the past? Is it just not true? What's going on?
Well, we have 2.5 million customers, and every now and then there is a situation with even a dozen customers, and if they hit you up on Twitter, you know, probably not the best way to go around it. They should reach out to our support team, which is growing every day. And I do think we've done one of the better jobs. You know, check out our Trustpilot. We have close to 5 stars on it. And obviously there's always customers that are dissatisfied, but we're trying our best, and no one has ever had lost access to their accounts or lost money with NEXO for that matter.
All right, so there you go. So the ones tweeting also get in touch with the support team. Antoni, talk to me a little bit about China and crypto. Has Bitcoin mining actually recovered from the China crackdown?
Yeah, you know, this is the beauty and the resilience of Bitcoin, that every time there's trouble with the ecosystem, with the mechanics of Bitcoin, it self-regulates and, you know, comes out stronger on top of it. You know, when China in mid-April issued yet another ban, and they do that every other month, you know, we saw the hash power go down, meaning the computational power needing for the confirmation of transactions. And since it has recovered, it's close to the all-time highs, which means that mining in China has relocated in more welcoming jurisdictions, last but not least the United States. And you know, now out of this we've come stronger because the mining gets done with energy which is produced in a more sustainable way.
Antoni, let's pivot over to another part of the world. El Salvador, obviously, this week started accepting Bitcoin as legal tender, and the rollout did not go very smoothly. Is there a risk that it actually detracts from the case for cryptocurrencies?
Well, the glitches were in two aspects, you know, technical glitches with the wallets, which is normal, is a novel, new technology, a nascent industry, and they're bound to be, you know, hiccups. The other thing where we saw the price drop earlier this week, you know, we know what happened. This was a conspiracy by the IMF and the World Bank to smash down the price of Bitcoin because they have been very critical. Kidding aside, you know, this is what conspiracy the theorists are saying on Twitter. But, you know, we had the run-up with Bitcoin. We rallied something like 80%. It was natural that there is going to be a correction. But for El Salvador, it's an extremely important experiment here.
Antoni, I heard a theory that maybe big whales occasionally, when the price gets high, will sell a substantial amount of coins in order to force the liquidation of retail accounts. And we did see, you know, billions in liquidations, and then they come in and buy the dip. Do you believe that?
Somewhat, to a certain extent. You know, when there is a correction, we always look for narratives as to why it's happening, and quite often it is simply the market structure. It is margined accounts that get blown up, and there is a cascade of liquidations. And yes, there are people that come in, you know, the whales who sit on large quantities of digital assets, which can be easily deployed then to buy the dip, as it's colloquially termed, these types of situations. And it does this happen, but whether there's a larger conspiracy, I don't think so. Bitcoin is $1 trillion asset, and you need quite a lot of funds to have an impact on the trading activities.
Antoni, we only have 30 seconds left, but what's your forecast for where Bitcoin ends the year?
I think if we pierce through convincingly above the 200-day moving average, we're hovering around it right now. We'll see new all-time highs in excess of the 65,000, which was Bitcoin dollars per Bitcoin in mid-April. We'll surpass that in this quarter, in the last 3 months of the year. And if this happens, it opens up the air for 100,000 by the mid of next year.
Okay, technical analysis on Bitcoin with Antoni Trenchev. Thank you so much for joining us, co-founder and managing director of NEXO there. We'll have plenty more on cryptocurrencies. We'll also look at CBDC and, of course, the ECB. This is Bloomberg.
We haven't moved this year. I still maintain that we're probably going to end up the year nearer to 1 than to 2%. And I don't fully understand why the consensus forecasts are anywhere near 2%. To me, that's not particularly robust mathematically.
Well, that was Stephen Major of HSBC speaking to Bloomberg earlier with a pretty bold call on the Fed. Tom Keene, co-anchor of Bloomberg Surveillance, joins us. Tom, you're back. You're listening to Stephen Major, and you're looking at VIX.
Well, I'm looking at the VIX as well, just as one measure of the fear that's out there, the angst, the ECB angst that you see, and then you've got all sorts of other central banking angst as well. Out on Twitter, as we speak, Lupo the dog leads the charge on Fed dialogue. We thank Francine Lacqua for that careful analysis. Let's go to the VIX, and this is how bad it is, and the answer is it's not bad. Let's put things in perspective. It's ugly when it's over 30, the red line. It's ugly. Clearly, with the pandemic, it was terrible. But the general trend, Francine, is down, and even at a 19 level this morning, not all that bad.
Tom, how much do you think central banks outside of Washington, I'm talking about, the ECB or the Bank of England, care really about the currency? Because the move that Christine Lagarde makes today could really affect the euro, and then that could really affect exports.
Well, it's stasis right now. I mean, the bond market's absolutely dead in the water, and currency's not much different. You need big figure moves, Matt, to bring up that theory, and we just haven't seen it. Now, people can guess strong euro out to 120, out to 122. People are going the other way as well, weak euro, but those are just forecasts. To actually get a currency move, we haven't seen that in ages.
Tom, while you were out on an extra long weekend, John Farrow was making it very clear he was A, excited for you to come back, and B, actually excited for Christine Lagarde's press conference for the first time in a while. Do you think we could actually get some fireworks today?
Under the American model, Kailey, we should. Central banks love to surprise when it's least expected, but that's not the history I've seen at the ECB, with some of the rare exceptions of Mr. Draghi.
Tom, very careful analysis there with our decision day guide to the ECB, our Tom Keene, co-anchor of Bloomberg Surveillance. Now, this is what else we're watching. I mean, ECB will probably take 85% of our time today, but always a bit of time with sports as well, Kailey.
ECB will take up my time until maybe 8:20 p.m. Eastern time when we get the kickoff for the Bucks-Cowboys game and the NFL regular season starts tonight. I have to say, disclosure, I am not a Tom Brady fan. I was not excited when the Buccaneers won the Super Bowl last year, but they are the defending champs, so we'll see how they do against the Cowboys. And my Denver Broncos play on Sunday, so you can bet I will be spending all day Sunday on the couch because I am so excited that football season is back, Matt.
I'm so jealous. I mean, my time zone is off for that, but those are the best Sundays. In fact, the best is when you live in a town that has a high school team playing on Friday, and then you can watch college ball all day Saturday, and then watch the pros on Sunday. I will be very happy if I'm ever back in a situation where I can do that. I'm going to be watching the German Finance Ministry and the German Justice Ministry both being raided by a special prosecutor here in Berlin. Now, if this kind of thing happened in the U.S., can you imagine if a prosecutor raided Treasury and Justice in Washington, D.C.? It would be, no doubt, big red sticky headlines all over the terminal and possible turmoil in markets. Here it is being taken with a grain of salt. It looks like they're just worried that the proper documents haven't been passed on. If you don't pass on the proper documents in Germany, Francine,
never a good idea.
You're in trouble. You need triplicates in paper. Yeah, absolutely.
It's like handing receipts in Europe. Always hand in your receipts if you put some T&E expenses through. Now, I'm watching the ECB. We know that 85% of our time overall will be spent on ECB. It's all about the PEP. And look, overall, I guess we'll have to decide whether the recovery is strong enough to warrant an imminent slowdown in monetary stimulus. I know one of the things that the ECB will be looking at is not only the economic outlook, but actually how the markets will take whatever they say today. So a two-pronged attack there from the European Central Bank. More Bloomberg Surveillance up ahead. We'll hear from Morgan Stanley chief economist Seth Carpenter, amongst others. This is Bloomberg